This is a fun one. Should I take my pension lump sum or monthly in retirement? This is an option that is confusing and full of jargon for many of you folks who do have a pension through an old employer and you're nearing that retirement age and they're sending you stuff in the mail and they're sending you notices and you don't know what the heck it means. Please translate to English. So ultimately, if you are in that boat, you are highly encouraged to go speak about your personal situation with a financial planner or advisor of sorts, with your tax preparer or planner of sorts. Get yourself a professional too, because this is a big choice typically. And there are lots of ways it can go wrong. And I've seen it gone wrong before too, as well, with people I've spoken to. So, first things first, which is better, lump sum or monthly? That's going to be a very, very generic response here. And again, it is so dependent on your own personal scenario. But here's the main difference I can give you. With the lump sum version, you have more control over your money and your benefit than you would by taking the monthly amount from whomever you used to work for. So that's probably the most important to me and to my clients when we're discussing what to do with their pension options is, do we want more control? The second thing is flexibility. Flexibility means, let me give you an example. If we take it monthly, that is your allowance for the rest of your retirement, and you cannot exceed your allowance. Essentially, there is no IOUs, there's no accelerating it. If an emergency comes up, you have that monthly amount, and that is it. Whereas if you take a lump sum and you roll it to your IRA, your individual retirement account, you have a lot more flexibility with that when it comes to your distributions, how you invest it. Can you make a higher rate of return or not from the pension monies that it's in and that fund manager? Maybe, probably. But a big thing is the flexibility to access it if you need to access it, either for enjoyment or for emergency or for your estate plan and so on. Number three, by taking a lump sum instead of a monthly, you have more of an estate plan in place. Now, I should mention, yes, it is more risky, obviously, to have it in an IRA, have it invested. Theoretically, it's more risky. There may be more volatility up and down in your portfolios for better or for worse over time. But you have an estate plan in place. And let me elaborate on that. Someone can inherit your IRA, whether that be your spouse or your children or something you care about, if something were to happen to you. And that can go on for generations and generations and generations based on the account type, essentially. I should mention the rules are also always changing for IRAs and whatnot. But essentially, someone can inherit it and it's not just poof, gone. If you take the monthly benefit on your pension, chances are if something were to happen to you, it could be the day after you retire, could be 10 years down the road after you collected some checks, it could be way down the road because you actually lived a long time. When you pass away, it's based on the option you choose here. There's going to be if you take a single lump, it's a single pension or annuity amount, with the maximum monthly dollar benefit amount, it probably means there's no survivor or spousal benefit on it. Now, you can add a spousal benefit. What they're going to do is reduce your monthly payment on it. But that means if something happens to you, your spouse would inherit. Typically, it's about 50% of your benefit is what I see out there. But if something were to happen to you both at the same time, sometimes and a lot of the time, there's no benefit beyond that. So your children don't inherit it, especially if they're already above 18 or they're of age, essentially. It's just gone. And that's terrifying to a lot of people when it comes to estate planning too, as well. So those are the three main factors that I discuss with clients when it comes to taking out their pension lump sum or monthly. Here's a word of caution. What I have seen also is people will choose to take the lump sum version, which typically I like the most when it comes to managing their own money and finances and whatnot. But they don't talk to a professional. They don't have help doing it. And what they'll accidentally do is withdraw that. That's a taxable event all in 1 year. That's a pre-tax account. I've seen this happen on close to $500,000 with someone. Did not work with them, but I'd seen it happen, obviously. And they paid almost half of it to the IRS in the form of taxes because of that mistake. So please cover all your options with someone who understands all of this. You do not want the IRS to win that big of a lottery from you from all those years that you work to get to retirement as well. And again, everyone's situation is different here. Last thing I'll mention on pensions here is it from a private company essentially, or is it from the U.S. government? So if you're a federal worker, you want to say that you want to feel that the pension is backed by the U.S. government, the taxes it can collect, and the full faith of it. I would ballpark that is probably a safer pension in a lot of ways, and that's maybe one where you don't have a lump sum benefit option even at that point. Most private companies, though, you're going to have a lump sum option or a fixed sum amount. Now, there's this thing called a Pension Benefit Guaranty Corporation. What they do is they actually insure pensions in case any of them were to not be able to fulfill their obligations to all the retirees collecting. This can happen. Your pension, while you get it monthly as a participant of the company that you worked for so long, behind the scenes, someone is managing that money. And if it doesn't go well, that means you can't get your pension. Now, the Pension Benefit Guaranty Corporation basically insures against that, and they insure up to a certain percentage or dollar amount per. Now, that's very vague. It just means that your pension may be guaranteed. You may think it's guaranteed, but it's not necessarily fully guaranteed always. My name is Justin Hodges. You have a lot of options with your pension. Congratulations on getting to your retirement and thinking about what to do with that money.